Today is the 31st of January 2012, and again we'd like to welcome you to MegaTrade 101 video presentation. What we have here is the dollar index, currently working at 78.86. As we can see here, nearing the bottom of the 78.77, which it attempted to. This is a line graph that we can see, and for purposes of the time frame, we're looking at the 4-hour time interval of the US dollar index. Having established the high at 81.78, it continuously went lower and still working at the 78.85 level. With a more distinct look, we can translate this chart in a candlestick formation and moving forward to a daily chart formation, where to expand it, we can look at it this way to be more of a distinguishing mark, where moving at these levels, we can see drawing a line on a free hand that particular price level is working on a support at 78.85, where the possibility of a continuation to move lower is still there, in spite of a stochastics and relative strength index meeting at this point, where the outlook for the dollar, as others would call, would try to move back up on its trend line support. However, we foresee that the dollar would normally have to go lower, breaking this support. For the time being, since it is the end of the trading month towards the opening of the new month, however, the overlaying factor that the opening of the month is within the closing price of the week's trading. This is a weekly chart of the US dollar index as well. And if we draw the same line here on the support, you would notice that the prices right now, although if you want to extend it, to the current price here, will still show you exactly that the prices are working on the support level. More likely, as we have mentioned, that there is no signal for a continuation to move higher, that the tendency here would have to penetrate and move back within the levels of the previous low, which is the 77.93 level, give and take, plus or minus, and the opening price here on November 20th, 2011 at 77.97, give and take at these 78 levels, so 78.05 would be more likely meeting a support price level here. By the way, would like to inform you that we are on real-time basis, live trading, as the market is moving at these levels. As we are also watching the rest of the other currencies, that's the reason why we have to pause once in a while to be able to compare how the market moves, comparing it with the movement of the US dollar index. We basically have two screens, monitor screens. However, we're recording this on a separate screen showing you the weekly formation on the US dollar index. So from the previous high of 81.78, where this configuration shows a price reversal and a confirmation down relatively with a negative tone on the stochastics. Remember that the stochastics are more or less a lagging indicator, although the relative strength index only measures the strength and weaknesses of the market, including the possible divergences that it occurs from time to time. An initial target of 7805, 78 even basis point for the US dollar is what we're looking at, with a slight rebound or pullback up again, simply because any first penetration on a support trend line would normally meet some liquidations or settlements, short coverings as well, and especially towards the end of the trading week. Now, with that said, based on the conclusion that the US dollar index would move lower, based on our technical analysis hereof, is that the sterling pound is actually within the rising channel, an equidistant channel that we have drawn here, coming from a low of 1.5235, where you could see that there is actually a price reversal, although the near term, if you look at it on a weekly basis, would show that such a reversal was made, but within a major downtrend, which means that the only confirmation we had was when this three configuration or candlestick bar was made. The only confirmation was made at breaking the 1.5560 level. However, taking a second position because we have taken our first position and liquidated, although we felt that the intricacies of the pound in itself, where you could see a triple top formation here on the candlestick wick, then the possibility for it to penetrate higher than the high of 1.5794, which is the current price right now, would reach its channel resistance of 1.5985. And on a weekly basis, you would see that there is a buying divergence that occurred, although on a short term, there is basically no divergence. However, this has been established as a good support, and breaking the 1.5560 level made it bullish, and likewise took a position at the 1.5760 level here, or roughly I would say 1.5695, give or take. And so far we're in the money. Now this euro dollar chart is on a daily basis, while comparing it on a weekly basis. This configuration again, which we made mention, did make an inverted hammer that signaled from a low of 1.2623, went to a high of 1.2985, wherein the 1.2880 is actually the initial resistance, give and take 1.2893 as indicated, although the price right now is at 1.3185, which is actually on the meeting the 21-week moving average of 1.3269 is actually where it would try to attempt once the US dollar continues to move lower. However, we anticipate that within this week, towards the end of the week or the trading week and the opening of the new month, this price would then be penetrated. However, like I said, that this is within a major downtrend, but however, within a major downtrend, there will always be an existing or a recurring major correction, which is actually being made. So therefore, the near-term outlook for the pound as well as the euro would have to move lower with only a daily correction lower. And once the US dollar continues to move lower towards the 7805 level, 78 even, we would see that this would now, the previous high of 1.3232 would then be penetrated as well with extensions above the 1.35, where the next level of resistance we would be meeting would be at 1.3550. So on a monthly basis here on the sterling pound, it's obvious that the 1.5778 working price right now is actually a bullish bar formation where extensions could reach to the channel resistance of 1.5978 80 level, which is around the more than 50% towards the 62.8% retracement on the Fibonacci. Although, like we have mentioned, that it is trying to touch that particular major resistance before it actually moves lower. As you could see that this may possibly be, oops, sorry about that. This may possibly be the head and a possible neckline here where it did not really penetrate. It did though 3 times, but on the 3rd time recovered back up. If we look at it here, let's see if we can get the low price, although based on our indication here, the low for the particular month is at 1.5235 level, where the 1.57 is back up. So a possible right shoulder formation is being made before the actual down for that particular movement would continue. A similar situation is established here, including retracement the retracement on the Fibonacci from a low of 1.1876 to as high as 1.4939, and the previous low of, or rather the current low for the month, would be at 1.2623, working at 1.3177. So it still has a lot of way to move. A 50% retracement here on the Fibonacci retracement, and it's trying to achieve a moving average attempting at 1.3864, although we don't expect that to happen in the near term. So both currency pairs would likely be closing on the higher note, meaning to say on a bullish tone, where the next succeeding month for February would start off with a spillover of bullishness as far as sentiments are concerned for the traders. This is what we look at based on our analysis. So the near-term outlook for the pound as well as the euro would be higher. For the US dollar to move lower in the next succeeding weeks ahead, we're still expecting some pullbacks along the way on a daily basis, but the near term for the trend to move higher for both pairs will still be higher. Thank you very much and have a pleasant day, and only the best to your trades.